On Wednesday, Canada became the second country in the world to legalize marijuana for adults and the first to do so with a fully regulated commercial market. This has rightfully been big news on both sides of the border as Americans wait for the United States to catch up with our more enlightened neighbor to the north and finally end prohibition here at home. The problem now is that in failing to have kept pace with our northern neighbor, the Trump administration and Congress are potentially giving away the world's next great industry to Canada. For an administration that came into power on an America First agenda, railed against international trade deals for being unfair to the United States, and promised to create new jobs here at home, its current stance on marijuana policy could not be any more counter to their stated goals. If anything, the Trump administration's current stance on the cannabis industry can only be described as Canada First. In a previous column, I laid out the political case for why President Trump should embrace legalization. Early indications are that the administration is at least considering this point of view. Recently, Republican Congressman Dana Rohrabacher, R. California, one of the strongest supporters of cannabis legalization in Congress, told the press that President Trump is likely to push for some kind of legalization after the midterms. Meanwhile, Tom Angel of Marijuana Moment reported right here on Forbes that Congressman Blumenauer, D.R., another of Congress's strongest supporters of ending prohibition, has been imploring Democrats to get more aggressive on this issue, fearing that their continued failure to do so will allow President Trump to take this issue and the associated political gains from the party in advance of the 2020 elections. In a letter to congressional Democratic leadership, he wrote, "If we fail to act swiftly, I fear as the 2020 election approaches, Donald Trump will claim credit for our work in an effort to shore up support, especially from young voters." While it is encouraging to see potential movement on this issue in the coming years, this administration's failure to act, like those that preceded it from both political parties, has put American cannabis companies at a significant disadvantage compared to their Canadian counterparts. For the biggest proof of this, look no further than public market activity around cannabis businesses. While some American companies like MedMen and Green Thumb Industries have enjoyed public market valuations north of $2 billion, these pale in comparison to their Canadian counterparts. The largest Canadian publicly traded companies have received much higher public market valuations on average, giving them access to cheaper capital and a stronger currency to make acquisitions in the industry. Canopy Growth currently has a valuation of $11.6 billion. Aphria is at $3.7 billion, and Tilray notoriously had a market cap of nearly $20 billion in mid-September, before coming back to a still impressive $13.8 billion as of Wednesday. The great irony with these publicly traded companies is that Canadian companies are financially benefiting from American investment activity, while American companies are forced to go north for their public market activity. Tilray's valuation explosion happened on the Nasdaq, where Cronos also trades, while Canopy Growth is listed on the New York Stock Exchange, which is also soon to be the home of Aurora Cannabis. While this has benefited American public sector investors, most of those gains leave the country for Canada, where the companies are based and where most of their stock is held. Meanwhile, American companies are barred from listing on an exchange in the United States because federal law still deems their activity to be illegal. Even when listed in Canada, American cannabis companies cannot access the country's largest exchange, the Toronto Stock Exchange, who will list Canadian marijuana companies, but not any that engage in federally illegal conduct. American companies instead are listed on the secondary Canadian Securities Exchange, which ironically is experiencing a resurgence due largely to American cannabis company listings. This leads to a disproportionate amount of investment into American companies coming from Canadian public sector investors, with many of these profits staying in Canada and benefiting the Canadian economy, while American investors largely sit on the sidelines. Part of the reason that Canadian companies enjoy such high valuations is their ability to access international markets, which remain largely off-limits to American companies. A country of 36 million people is likely not enough to support several multi-billion-dollar cannabis companies. These valuation boosts have largely been based off of Canada's massive international head start. Many of these companies have built production facilities in Europe or have bought interest in cannabis licenses around the world. American companies, still viewed as drug traffickers by the Trump administration and the federal government at large, are unable to export their products to these emerging international markets. States like Oregon, which has a massive oversupply issue but is known for producing some of the best quality cannabis in the world, is not allowed to sell that product across state lines, let alone to import into European markets. If this situation doesn't change soon, the federal government will likely have ceded the next great global industry to Canada. Many people have speculated that when federal prohibition ends, alcohol and tobacco companies will come in and acquire the current leaders of the American cannabis industry. While that may be true to a degree, the meaningful head start that we are giving to Canadian companies, with their massive valuations, access to cheap capital, and international assets, means that even when this does become legal across the United States, it may very well be Canadians who wind up acquiring and owning the most prized American cannabis assets. It is not too late to reverse this trend, but the federal government must act fast to give Americans a fighting chance to compete in this growing global market. This has led to U.S. businesses literally begging the Trump administration to take proactive action in order to level the playing field. TerraTech, which is based in Irving, Calif., and trades in the over-the-counter market in the United States, recently took out a full-page ad in the Wall Street Journal on the eve of legalization day in Canada, imploring the president to legalize cannabis in the United States. The letter starts by rightly pointing out how the federal government's inaction has put American business at a significant disadvantage. The rapidly growing American cannabis industry represents an extraordinary economic opportunity for our country. Yet Canada is threatening to deprive American farmers, workers, and businesses from the prosperity that rightly belongs within our borders. There is only one way to give American cannabis companies a chance to compete with their counterparts to the north, despite the head start they already enjoy. That is for the Trump administration to remove the shackles by legalizing marijuana in the United States. If this administration truly cares about creating jobs and opportunities for American business people, workers, farmers, and investors, they will not wait until it is politically expedient to support legalization, although that should have already occurred as well, but will move aggressively to legalize now. The longer they wait, the more likely that they will have given the future of this industry to Canada. President Trump, stop making Canada great again and give American companies the boost they need to make cannabis the next great American industry.